Hello everyone, welcome back to our channel. But if you're new to this channel, please click the subscribe button and your like button so you can help this channel to grow. Are you thinking on investing on solar stocks? Or you've been investing to ARRY technologies? In this video, let us talk about one of the best solar company to invest in that had been or just have its IPO last month, which is ARRY Technologies Incorporated, the world's second largest supplier of solar tracker that moves solar panels throughout the day to maintain an optimal orientation to the sun, concluded their first earnings report as a public company for the 9 months ended September 30, 2020. If you're able to get in on October 15, 2020, when it opened at $29, then you had earned already a 45% when it closed at $42 on November 9, 2020. Honestly, my entry point is $39.89. Kinda of late, but no problem at all, as my target price on this stock is $75 in 6 to 12 months and or $130 in a year or two. The stock is up 13.9% last Friday on Joe Biden's victory over Donald Trump, as well as on its positive earnings as released Thursday night, but had lost its momentum so far to start the week, Monday of November 9, losing $2.81 or 6.27%. With this volatility, which is pretty normal for a newly publicly listed companies, is ARRY stock a buy or sell in November? Shorting this stock just a month it went public is not a wise idea, but buying and holding it until your target price is met or holding it long term is excellent one. As solar and other renewable companies is expected to rise in months or years to come, as Joe Biden has planned to spend $2 trillion on clean energy development over his first 4 years in the office, then decarbonize US by 2035. In fact, Abigail Ruth Hopper, CEO of Solar Energy Enterprises, said a Biden presidency would advance clean energy incorporating environmental justice, while American Council on Renewable Energy CEO Greg Weston called the election historic one that would create the clean energy future that Americans wanted. Ms. Hopper had added that an accelerated transition to renewable energy provides both climate protection and economic prosperity. With more than $60 billion in annual investment and two of the nation's fastest growing job categories, wind turbine technician and solar power installer, which renewable energy can help power America's economic recovery as it did in 2009. With the hopes of clean energy program of Biden, the Solar Energy Industries Association laid out their Solar Vision of 2021 and the 117th Congress, in which investment tax credit is one of the priorities, which shall provide ARRY an opportunity to grow, being the second largest producer of solar tracker next to Nextracker at market share of 11%, as conducted by HIS Market Research. Moreover, more than 1 of every 4 solar panel installed in the United States has ARRY tracker, which demand has been growing by 20% more than overall, faster than the overall solar market. With that being said, ARRY Technologies revenue in 9 months ended September 30, 2020 had increased by 64% to $692.1 million compared to $423.2 million for the prior year of the same period. While its gross margin is tantamount and very excellent as it is increasing with 24% compared to 2019's 21%. In fact, gross profit had increased by 86% year over year. They got it because they had reduced the purchased materials cost resulting from supplier arrangements and shifting volumes for certain components to new, lower-cost suppliers and greater leverage on fixed cost from higher sales volume. It suggests to us that its management can be relied upon on purchasing a low-cost but high-quality materials while they had increased their sales consistently. Income from operations increased 127% to $97.5 million compared to $42.9 million during the same period in the prior year. Net income, wow, it increased 431% to $68.8 million from $13 million in 2019 of the same period. Meanwhile, its basic and diluted earnings per share is 0.57 compared to 0.11 during the same period in the prior year. Meanwhile, adjusted EBITDA increased by 96% to $140.5 million compared to $71.8 million last year. For the full year of 2020, they had expected a revenue ranging from $845 million to $865 million. Meanwhile, adjusted EBITDA at the range of $156 million to $160 million and adjusted net income per share in the range of 0.82 to 2.86. So look at that, how efficient they are in gaining or increasing shareholders' value by having this positive earnings per share and increasing net income year over year. Some growth driver to look forward into to this company is their expansion internationally. In fact, on their sales, only 10% is originated outside the United States. Good to note that they had increased the number of their personnel with their technical and business development in the United Kingdom, Spain, Brazil, Mexico, Australia, and China. Speaking of China, trade conflicts between the two countries, the United States and China, might be relaxed under Biden's administrations, giving ARRY and other companies a tremendous sales opportunity on the largest market of the world. They also said during the call that they will be announcing very soon a large deal with very strategic customer, which growth on not only domestic but also internationally. We can also expect the beating of their revenues year over year as they have a total backlog of $703 million. An increase of over 30% from the same period last year, which they expected to fulfill by the end of 2021. With this, analyst estimates can easily be achieved. Speaking of analysts, guys, in November 9, 2020, 9 analysts had initiated their coverage to ARRY with price consensus of $40.06. Guggenheim provides the highest price target of $54, while Goldman Sachs, with a buy rating, has a price target of $50. JS analyst Brian Lee said that The company is a supplier of solar trackers, a key component utilized in utility-scale solar. He also believes that ARRY, as a top 2 player globally, appears poised to leverage its technology leadership in maintaining stable pricing and margins. So, is ARRY stock still a buy after this Q3 earnings report? In Q3 of 2020, ARRY current ratio is 1.8. Not too bad compared to SolarEdge of 4.56. It suggests that the company is pretty liquid, as the industry or average industry current ratio is 2:1. Meanwhile, ARRY is very solvent with debt to equity ratio of 0.46. Look at it. It almost has no debt, giving them that advantage to spend more on their project development. Meanwhile, its total ratio is 3.16, almost double to SEDG's 1.83. In this benchmark alone, having a strong balance sheet gives me the reason that the stock is a strong buy in 2020. Along with its increasing gross profit margin and the fact that it already had produced a positive operating result. Furthermore, ARRY has enterprise value over EBITDA multiple of 41.56 compared to SolarEdge 71.12. It gives me the reason to believe that ARRY fair price is around $138. Remember that my target price to the stock is $75 to $130. Therefore, giving me a potential return of more than 200% with my entry point. So, if you want to earn more than 100% return, and then I would recommend or strongly advise to get or at least start a small position with a stock if you want to have some solar play on your portfolio. That's all for today, guys. So if you like this video and you find it helpful, please give me a like. And also have that subscribe button and your notification bell so you'll be keep updated on my upcoming videos. Please remember that I'm uploading a video once or twice a week.